first loss was actually Slack before they got bought by Salesforce, right? I mean, it just made sense, right? Zoom was like taking off, right? Peloton was taking off, and I was like, Slack has not really moved yet, right? And that was it. That was the thesis. And then they had earnings, and it was horrible, like down like 25%. And I think I kind of misunderstood the dynamics between Microsoft Teams and Slack, which was kind of a miscalculation. And so that was like my first big loss.
So your first investment that you kind of lost money on was Slack.
Yeah.
How much money was your account at that time, and how much did you lose?
Probably around like 700, 800K, right? And
so your first loss was after taking your account from 35K to 700, 800K?
I would say so, yes. Yeah.
And then how much did you lose on the Slack trade?
Yeah, probably like 200K or something like that.
And what did you learn from that loss? Like, was this an important lesson, or was this just like you were taking the same kind of like outsized bet over and over again? You kept winning, and then, hey, does this one just like the cards didn't fall in your favor?
I have this lesson still to this day. Like, earnings are a coin flip. You know, like no matter how much you think you know about a company's revenue numbers or the climate or whatever, earnings are a coin flip, right? And so and it could be pretty expensive at that time too. And so I think what I learned is if you have enough of a buffer of safety, right? Maybe you're up a lot recently, right? Like you could afford to take that coin flip. Just like I think, you know, anyone at a casino, if they're kind of hot streak, right? Maybe you could take that extra bet. But yeah, if it doesn't go in your favor, you got to be conservative with your next play.
Do you think that the volatility or the percentage price change is greater if earnings are good or if they're bad? Like, does a stock respond more aggressively positively or negatively if earnings are positive or negative? Or is it still just like a coin flip? So it's like 50-50 every time? It's
really 50-50. There's like a lot of complicated math using options for like implied volatility and trying to figure out like what are the expected move in the upside or downside, right? And so all this is kind of published out there, but essentially you never know if it's actually already priced in or not, right? So like a lot of people, you know, even some of the biggest companies right now, like Nvidia, like there's so much data about them, you would think it's priced in because they're up so much, right? And then yet still they surprise to the upside. And then it also depends on like how much of that surprise is. So there's a lot of variables that go into it, and like, I mean, you could obsess over trying to figure it out, but it's a coin flip at the end of the day. I think it's actually more intellectually honest to treat it as so, you know, that like I'm putting this on a coin flip.
Do people ever reach out to you with inside information and they say, hey, here's a tip?
If so, Graham's looking for that exact information.
I'm curious because
actually no. And I'm very careful to not even like accept those kind of DMs if it kind of feels like that.
I'm surprised because I thought for sure that people would say, like, if you've helped them make money, that they might try to say, like, hey, here's some info, thank me later.
Everything I use is public information. Like I don't have any insider information, right? Like I just connect the dots. Like a lot of that is like, you know, hope or copium or insane kind of theories about like, you know, this guy liked this post on LinkedIn and like, oh yeah, they're in Miami together or whatever. But again, that's public information, right? And it's kind of more of a fun side story than the actual play.
What do you think are some of the biggest lies that are spread about investing online, or the information that's being said that if the average person followed, it's just not going to help them?
I don't know why some people get obsessed with trying to make a trade every day. You know, some people think being a trader or day trader or options trader is making $1,000 every day. I think it's because it's like, it feels like work, you know, it feels like activity. I don't think that to me is not how, I don't endorse that. I think that's a lot of energy that's wasted because yes, you can make $1,000 for a couple of days and you lose $5,000 one day, you kind of break even, right? I think swing trading to me is kind of the best ROI on like your energy, on your time, on your sanity, on your returns, because generally the stock market goes up. Right? Like, you know, the S&P 500 goes up. Good companies should go up. What I'm trying to do as a swing trader is to maximize the gains in a shorter time frame, right? Because the market goes up and it also goes down. And if you try to catch things on the bottom and sell them on the top, you are basically compounding your gains every single time. And that's how I was able to do 285x in 21 months.
But that's also a very tax inefficient strategy. And I know a lot of people probably oh, Jack's talking about taxes. Like, you know, this doesn't really apply to me. But in actuality, taxes can cut into your gains substantially. And then that compounded year over year, you have just a smaller amount post-tax that you're able to build, let's say 30%, 40% year over year returns on.
Well, I joke, just make more money. I mean, again, yeah, my situation was really, you know, unique. This was done in my 401k. So it was, you know, no taxes. I didn't pay a single cent on taxes until I withdraw. But even though I'm doing this in a Robinhood, normal brokerage account right now, I mean, if you're trying to maximize for long-term gains, but the stock goes down, you kind of wipe out those potential gains anyways, right? So I don't know. I think short-term gains are fine.
So how much time should the average person spend a day researching and trading?
I mean, I don't think it takes more than like an hour in the beginning of the day and maybe like, at the end of the day, right? Just like reviewing like what's trending, going on CNBC, see what people are talking about, follow a couple of people on X and see what stocks they mention. The algorithm, to be honest, is really good now. Like a lot of people have lamented how the X algorithm has changed over the last few years. But I think it's really, really good now. So if you follow the right people, you'll be getting your, intake of stock use. And you could also turn the bell on for certain influencers and get their posts as soon as they make them.
To get more specific, who are those people that you should be following on X, not including yourself? Like, who do you look for information?
The first one that comes to my mind is Amitt is investing. He's the GOAT. He's got like 500,000 followers. He was early on Palantir. He was early on Robinhood, posting all these deep dives and interviews with these folks. Another, he's a buddy of mine, but 𝗪𝗧𝗧𝗏. He recently, been posting a lot about the photonics trade and like all these kind of bottlenecks related to the AI infrastructure, like picks and shovels kind of play. And again, like these amazing deep dives. Because like, it used to be that you could only get these deep dives from like these Morgan Stanley, 30-page PDFs, right? Which are like really, really dry. But I think in a kind of more modern era, people are reading bite-sized tweets and learning a lot from that kind of drip feed of information. And then I think another one is Serenity, this anonymous, white-haired anime profile picture. She or he blew up from nothing to almost 1 million followers just in the last 6 months. And it's really, really good, like deep takes on like the AI infrastructure build out.
I really want to get down to what separates you, though, from all the people who want to try this or have tried it and fail.
Yeah.
Because I am worried that people go and they see your story going all in and they say, oh, I'm going to go all into, and they just lose a ton of money. What separates you? Like at the end of the day, have you just gotten lucky? Is there a skill? Is there something you look for specifically? Are you able to avoid red flags?
Is it an intelligence thing?
And most people think forming an LLC is just about filling out one form and calling it a day, but there's a lot more to it than that. And if you skip the rest, your LLC isn't really set up the way it needs to be. That is why we have partnered with Northwest Registered Agent.
For $39 plus state fees, Northwest handles the state filing and makes sure you have everything you actually need: your operating agreement, membership certificates, and banking resolutions.
Without those documents, you might be registered with the state, but you're not really ready to operate because banks, vendors, and partners expect to see them.
Plus, you get a free domain, website, email, and phone number when you file your LLC through Northwest, which means your business is ready to operate right away.
And your home address never goes on the public record. Northwest uses their own address on your filing instead of yours.
So if you want your LLC done right the first time, just go to northwestregisteredagent.com/ICH to get started.
It's northwestregisteredagent.com/ICH, or click the link down below in the description to get your LLC filed.
Thank you, Northwest Registered Agent, for sponsoring this episode.
At the end of the day, have you just gotten lucky? Is there a skill? Is there something you look for specifically? Are you able to avoid red flags?
Is it an intelligence thing? Is it like a personality trait thing?
I get very obsessed. And I think that is probably one of my strengths, that like once I'm in the stock, I'm like obsessively watching it like all day. Like back in, the pandemic era, like I would even be like, on a Zoom call, right? And I have like my chart open over here. If you were following me, I think the most important thing to learn really, is learn how I do things, right? I endorse independent thinking. Like I'm here trying to share my research, my train of thoughts, like why I'm thinking this, right? What I noticed, how I'm connecting the dots, and obviously my trades themselves. And I'm really hoping that people kind of pick up that, like, if you have figured out, okay, I'm willing to all in this much amount of my money, right? All into one stock, follow it, okay, and now you're basically watching it play out in real time. I think that's much more better than kind of a simulation or kind of back testing or reading a book, right? Because when you're reading a book, I bought here, I bought sold here. But when you're actually watching it play out in real time, you'll kind of feel it. That like, oh yeah, he sold this because, everyone on Twitter is scared of this news, or the Fed chairperson did these things, and like Kevin kind of connected all these dots and decided this was the top, it's time to sell. And I think that's you're gonna get that much more ingrained in you by kind of following me and watching how I trade in real time.
Do you ever set limits where it's like, hey, if it's down 20%, even if I'm sleeping or I just wasn't paying it, it's going to sell. Or if it goes up a certain amount, it's automatically going to sell.
I've also never set a stop limit. I'm very weird. I'm very afraid of actually, your situation, right? Where it's like randomly down 20% one day for reasons that I disagree with, right? Just some random macro or some fear headline, and then I get automatically stopped out. So I've never set a stop limit my whole life.
Now, you've previously said that every man should trade stocks like they date women, only one at a time. Why don't you like diversification?
Yeah, that's my my specialty on Twitter. It's financial rage bait.
Why don't you like polygamy?
Well, I've been very loyal.
Why shouldn't men date 10 women at a time?
Yeah. So
like Jack.
Props.
That's just not even true.
Concentration creates wealth. Diversification keeps it, right? That's just true. And I think, we go all in on things all the time in our lives, right? When you're a job, that's an all in on your time, right? A woman, that's an all in, right? I'm saying and it's true. Like, when I met my wife, it was like only like 6 weeks in, we decided to move in together, right? Because I was like, this is it. Like, I think I love her and I want to move in. I want to get to know her, right? I just went all in. And I think, I don't know, a lot of people try to hedge, right? And try to, especially in the dating world, like, oh yeah, let me try to meet and find the best person. No, I think you should go all in. And I think that's really important. And you also really quickly find out whether it's working or not. Either with a relationship or even with a stock. You really quickly get obsessed with it. You research everything about it and you figure out like, oh yeah, if you're only in like 5% or only 5K, you're like, whatever. I don't really care about this.
But this seems like this is your personality type, is you're an all-in type of person.
Yeah.
You're either 100% in or you're out.
Yeah, I would say that's my personality type.
Do you think most people should follow that personality type? Or do you think some people would be better off not doing that? Or maybe they're a bit indecisive and when they go all in on something, they don't really think it through.
I think it depends on your goals, right? And your time frame. Just your view on life. I have always been a very impatient person, right? I've always wanted gain, success, whatever, as big and as fast as possible. And obviously, I've been willing to risk it, and I've made many losses, right? I lost 300K in crypto, right? I did my startup back in 2013, and I failed. And so I failed a lot. But I also kind of, over the course of my life, taking like a very TikTok kind of pattern in my life of risk on, risk off. Right? You do something risky, didn't work out. Okay, quiet down for a couple of years. And once you kind of regain that financial buffer, that mental sanity, maybe try on some risk again, right? So I think there's like phases in your life too, where it's appropriate to kind of take on risk.